Hello, everyone, and a very warm welcome to today's major markets update for Tuesday, August the 6th, 2024. Another webcast. I know normally you're used to a written update. One, I don't really feel for writing right now. Two, that is because there is so much to explain on what is going on that I think it is better done in speech than in writing. So please allow me to explain what I am seeing and that we are tracking who is topping and who is not topping and how we can not have a major top just yet versus yes, the major top is already in. I just really want to make sure that we are all on the right page, and the risks, of course, have increased tremendously that the major top has been struck. Interestingly, as I showed yesterday, a lot of market breadth indicators did barely diverge at the recent all-time highs, especially the AD line, which is often a sign that it might not be the top of all tops. But price is the final arbiter, so let's go straight to the charts. And please remember, you are a member, and doing the markets and analyzing the markets and trading the markets is hard enough as it is. So if you have any questions or are unsure, please let me know. So this is the very unorthodox B-wave top for the IWM for this final fifth wave. The problem I have is that using this wave count as a expanding ending diagonal wave 5 in green, we have 5 waves, 1, 2, 3, 4, 5. The problem is wave 3 in this case is not the longest, or it is the shortest. That's not allowed, not even in a diagonal. Wave 3 always needs to be not the shortest. It cannot be the shortest. So wave 1 is 8.37, wave 3 is 7.71, wave 5, 7.86. The only way to change that is in that of this low, we go to this low here. That would make wave 5, 7.52. That's the only way I can resolve this, okay? So if that is the case, then here are the warning levels for the bears. We've just gone above the first warning level, which is, of course, yesterday's high, but we closed below it slightly. The second warning level is, of course, Friday, and then, of course, the Thursday low, and then ultimately Wednesday high. So as you can see, we're only 1, 2, 3, 4 days away from the uptrend high. So it's still very early days, but these are all the warning levels for the bears. Okay. Again, I have a hard time counting this as a diagonal. If it is, then the only way to resolve it is that the low was on the 30th and not the 29th. That's it. That is the margins we're talking about. Matter of interpretation, I guess, but this does not look very nice to me. But if it's the case, then of course we have likely completed a first wave lower. It does reasonably look like a impulse. However, C waves are also impulses. And then of course we're going to get a wave 2, right? So that wave 2 should then retrace anywhere ideally between 50 and 76.4%. So we're going to put that on the chart. So the wave 2 should then ideally go somewhere there, right? And then, of course, the wave 3, let's assume we have a 50% retrace, is then, of course, somewhere around here, right? That is then what we're going to look for. Somewhere around there. And then, of course, the wave 4 should bottom out somewhere around the 100% extension, etc. You get the idea, right? So that is the idea we're talking about. This is, of course, not accurate in time. This is only accurate in price, or reliable. Let's put it like that. Not necessarily accurate, because you can always get extensions. And then, of course, the wave 5 somewhere down there. For the first wave down of a much larger impulse. Okay, so that's kind of what we're looking at. These are the warning levels for the bears. Watch. The bull's last chance is shown here. How do I interpret this price action that we've had here since the October low, which is quite overlapping and sloppy? Then we had a wave high here, right at 161.8% extension of wave A in green, measured from wave B in green. 1, 2, 3, 4, 5, C wave, a B wave, and then a C wave, and this is then a irregular expanded flat. 5 waves lower is a C wave. This counts well as a B wave because it doesn't count well as a ending diagonal because we're not meeting the right parameters. Okay, so that is pretty much what we are looking at as an alternative. With, of course, the warning levels for the bulls here on the map as well. If we go, of course, below yesterday's low, then something else is going on. All those good things. Okay, so that's pretty much what we are looking at. This is the bull's last chance, and then we can still target that 235 plus or minus 5 target zone. Okay, this is still possible. So then we had a wave, a B wave, some tricky B wave here as a irregular expanded flat, and then we can still target one more time. It is possible. I wanted to point it out that, of course, the line in the sand currently is yesterday's low, because if we don't hold yesterday's low, especially for the NASDAQ 100, we're going to go into another fifth wave lower. Here's the Dow Jones, speaking of that fifth wave. This is what we showed yesterday. Again, this wave 1 is kind of ugly. It does look better like 3 waves lower. Okay, so again, the top is quite unorthodox, but if that's the top, then that is the top. I won't be able to change it. It's just kind of unorthodox. Then this should be probably an A, a B, and now we're in a C wave, something like that. I'll show you that for the S&P 500, by the way, how we could resolve this. Again, this is a quite unorthodox, weird top. So if this is the top, as I showed you here as well. Anyway, 3, 4, 5. These are the warning levels for the bulls. Okay, so far so good. This is still possible for a very complex wave 4. You can still do this expanding ending diagonal. We're holding above, of course, the cutoff here, the wave 2. Don't really like it too much. Also, the Dow Jones, I would say, currently is a little bit combobulated, I would say. That is the word. Really confusing. Definitely confusing. I need more price action to see if we can really get 5 waves lower or not. So that brings me to the S&P 500, which still has a chance to go to 5,800, 6,000 for a final wave 5. Okay, we bottomed right here at the 161.8% extension, which was 51.13 to be exact, and I think we got 51.19. So this is pretty accurate for a ABC wave. These are the warning levels for the bears. So we're still not above the first warning level on a closing basis. Definitely intraday. So we kind of got a first shot, like a locked on, and that's about it. But none of the other warning levels have even been broken. So this is still potential for a wave 4 with, of course, very early days to be able to say it is confirmed. I cannot confirm it, neither deny it. So the other option is, of course, shown here with the warning levels for the bulls if we do break below these prices, right? So the first warning level, technically, we've already broken below because we closed below yesterday's high. We go below today's low, it starts to increase the odds that we are indeed in the 5 waves lower sequence, as we can show here using the hourly chart. Let me see if I can find the hourly chart. So this is the first chart showing that we've topped here for the C wave, right here at 161.8% extension for the C wave, like classic. And I've been able to resolve the 5 waves lower. Okay. How did I resolve that? By making wave 2 as also a flat. And then wave 4 was a zigzag, and then this is wave 5. And as you can see here, wave 3 was slightly longer than wave 1. So don't put the wave 1 low here, but I put it there. If I look at the 5-minute chart, then we have 1, 2, 3, 4, 1, 2, 3, 4, 5 lower. Excellent. So that would match. Alternatively, we have this, something like this. We're still going to see lower prices. Preferably, again, we're going to look higher, be it either for wave 5 or only for a bounce. Okay, I want to point out that this potential is, of course, on the chart for the top. And this will explain the three waves lower that we saw into the green wave A. Then we are dealing here with a 335 initial move. Okay, so then if this is indeed a large super cycle wave, it's probably all going to be ABCs, very ugly. And the first A is something like this, and we're probably going to go back to about 5550, potentially 5600, somewhere around there. And then a 5 low. So this is still very much possible. And of course, this wave counts completely off the table if you start making new all-time highs. And then we simply move to this wave count. Okay, that is what we are currently looking at, but we still need more price data to suggest that the low is in place. For now, we can say as long as yesterday's low holds, the low is in place, and we're either going to top out at about 5,500 or 5,550, somewhere around there, 5,550 plus minus 50, and then we're going to move lower, or we're going to go to all-time highs. Okay, so that is pretty much the bottom line. I prefer one more all-time high because of the fact that we only have so far 3 waves up, loud and clear, 1, 2, 3. Not 4 and 5, and then this would be some sort of expanding ending diagonal, and it will be a rather brief wave 5 that, of course, has a limit to how high it can go because it can never be shorter than wave 1. Okay, somewhere around there. To be determined, can all be subdividing, all that stuff, bigger picture-wise. But bigger picture-wise, as long as we hold above yesterday's low, we can move higher and expect 5550 plus or minus 50 at a minimum, potential new all-time highs. But I do want to point out this potential. This is a potential. So the chart, I've seen it floated around by other analyticians. It's not my preferred point of view just yet. All right. So moving on to the NASDAQ. This is the 3, the 4, and the 5 potential. It requires, once again, a break below yesterday's low to confirm it. Okay, we've reached the minimum downside target for a third wave. We've reached definitely well inside the 5th wave. And of course, now we need to hold below today's low to get this wave 5 going by breaking below yesterday's low. Then we have a loud and clear 5 waves lower, and that will make our life easier because that is then an A wave or a first wave. And then we're going to look for a bounce, like 50 plus or minus % retrace, etc. So that's what we're kind of looking for right now. Same here for the NASDAQ 100. So far, this counts better as 3 waves lower with about a CSA relationship. As you can see, the CSA relationship targets 1750, 56 or something like that. And we got there pretty good. So if we hold below today's low, break below yesterday's low, then we can target as low as the mid 16,000s on the NASDAQ 100. That is really a requirement. If we break above, of course, today's high, and I have to view this as actually only 3 waves down, and we might expect at least 3 waves back up to 17,800 for the NASDAQ and about 19,500 for the NASDAQ 100. Okay, that is kind of what we are looking at the moment. So I really want to make sure that we get this right. Last but not least, semiconductors. Semiconductors can still do 13 waves down. If not, we'll have a possibility for it to already have completed 5 waves lower, like this. So the warning levels are on the charts, and then we'll be looking for this B/2 wave. Okay, so the warning levels are, of course, on the charts, like that. Then, of course, we get this, receive 3. So technically, we can count 5 waves as having completed, with a possibility of 1 more lower low as well, but that only kicks in below yesterday's low. That is really the simple gist of it. Okay, we break, of course, above today's high. Then I think we can start to look here for about 54.50 plus or minus 100, something like that for this B/2 wave, because it does count pretty well as 5 waves lower. 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, 5. Very extended fifth wave, it's fine. So please keep that in mind. Bulls do not want to see a break below yesterday's low. That will then usher in, as I showed you, another leg lower, okay? Somewhere to the low 4,000s before we then see a counter trend rather. So it is very possible that we see this path. At the moment, I have no indication that this is the case. If anything, semiconductors might continue to rally due to SMCI's earnings, which are pretty good. I think it's up about 10% in after hours. We'll have to see that, but we're not even above the first warning level. So whatever happens, happens. I do not control the future. I do know that above 4,700 on the semiconductors is the first sign that the low is already in place. The second warning is here, and then, of course, the third warning all the way up there. But again, please remember that we have broken below about 5,049.50, this level here, which really increased the odds that the big picture for the bulls is over. Okay, so please keep that in mind. I don't care if we're going to make a lower low one more time and then we rally, versus we have already completed our initial 5-wave decline. This one looks higher, a little bit lower, and then also higher is all good. So these are the warning levels once again for the bears. The bulls is very, very simple. Below yesterday's low for the semiconductors, and I'm going to look for the low 4,000s. Okay, above today's high, I will start looking for about 5,500, probably in a ugly manner, to be determined exactly how that's going to go. All right, so once again, I really want to make sure we understand that this part here, the interpretation of this part for the IWM is critical in knowing if this is a B wave top or if this was a regular top and this was a C wave lower. All right, that's all I have for today. I hope you appreciate it. If you have any questions, please let me know. This is not easy to digest. This is currently what we're viewing. Bottom line is yesterday's low. We want to hold that. Okay, if not, we'll probably put in another leg lower for a fifth wave. Otherwise, we can nicely subdivide higher for, at the minimum, a bounce. Okay, potentially, of course, let's see here, new all-time highs. Take care, trade safe, and I'll catch you all later this week.